Good afternoon, Greater Boston Association of Realtors. This year 2020 President Jason Gill. I'm really excited to be able to present to you today a great group of panelists and some really important and timely communication to you about what's going on in our industry. We are really fortunate today to have Steven Sosa. He is the Executive Vice President of the Massachusetts Board of Real Estate Appraisals. Let me make sure my screen is shared here. And he's going to be talking with us today about how local appraisals have changed their business practices, insights on exterior and drive-by appraisals, and the bank's abilities to postpone appraisals for 120 days after the mortgage closes. So that's going to be some really important information for us to bring back to our clients and know about how the industry is moving forward. We also are really fortunate to have Teresa Hatton, CEO of the Massachusetts Association of Realtors. She's going to be updating us on the financial assistance program and the realtor advocacy on the COVID-19 related litigation, which there has been a ton of. There's been so much of our RPAC investment brought back to us through the efforts of the staff, both at NAR, MAR, and GBAR. I'm really fortunate to hear what she has to say about what's going on there. And then, of course, our incomparable John Volcheski, the GBAR Executive Vice President, will be talking a little bit about some of the resources we have and some of the upcoming events we have planned through this virtual town hall forum. And of course, Bill Boland is joining us, aka John Volcheski on the screen, but he will be joining us to discuss some of the legal issues and make sure we stay on track with our business practices during this difficult time in our industry. So with that, Steven Sosa, please join us, and thank you for giving us some time today to address our membership.
Jason, it's my pleasure to be here, and thank you very much for the invitation. John, I appreciate you reaching out to me and asking me to be part of this program. I thought start just for a second with how quickly we have changed the way we do work and live our lives. It was only back in March 10th that the governor first declared a state of emergency, which he then extended. And then it was March 23rd when we went to the non-essential businesses closing. And then again on March 31st, he extended that closure through until May 4th, I believe it is. So very quickly, we've had to adapt to a new way of living, new way of conducting our business and living our lives. The biggest issue that's facing appraisers today is figuring out how to comply with state and federal social distancing guidelines. And this is really a challenge when appraisers have to go inside a house to do an interior inspection. But what we have is we have some flexibility that came out from Fannie Mae and Freddie Mac that gives us the ability to, gives appraisers the ability to do some things that are a little bit different. For example, on purchase money mortgages, which I'm assuming most of the audience here is interested in, appraisers now can basically step through 3 different types of appraisals to find out which one would work. And this is at the lender's discretion as much as at the appraiser's kind of discretion. First of all, they can start with a traditional appraisal, do the interior inspection, and do a complete appraisal. The second flexibility that they've been given on purchase money deals is to do a desktop appraisal. And that's done on the standard appraisal form, the 1004 form. And it doesn't require the appraiser to go out and take a look at the property at all. And then the third flexibility is to do an exterior only appraisal, which the appraiser then does go out and takes a look at the property, takes some pictures, etc. It's interesting how all of this has changed the way that appraisers operate. You know, going into a house today means that an appraiser is putting on a mask, gloves, maybe booties. They're asking, if possible, for nobody to be in the house. They don't want to touch a lockbox. They don't want to touch a door. They don't want to touch a light switch. And so a lot of appraisers who are still doing interior inspections are asking their realtor contacts to make sure that the doors are open, make sure the shower curtain's pulled back, make sure all the lights are turned on, all the things that normally an appraiser might do when they go through the house. They're asking for somebody else to do it so that they're not potentially contaminating the property.
Steve, those are some really great tips, but I just wanted to remind people we are reading questions for them. If you have any questions while you go through this, to please put them in the chat box, and I'll be able to read through them at the end to make sure that you can address them before we finish up with your time. But thank you.
Yep, that's great. So that's the situation on interior appraisals, and there's a divide between the appraisers who will go inside and do an appraisal, an interior inspection, and then there's a number of appraisers who no longer will go in and do an interior inspection, and that creates some issues for both the lender and for the appraisers. But we're still finding that we're able to, I think, in general, service all of the loan requests that are going through for home buyers. In terms of exterior and desktop appraisals, again, the desktop appraisal allows the appraiser to remain at his desk or her desk, and using all the data that's available through whether it's MLS or the Warren Group, be able to perform pretty much a full appraisal assignment with the exception of the interior inspection. This is a product that gets delivered on a regular appraisal form. It may or may not have some pictures. The pictures will probably be labeled as coming from the MLS system or from some other source. And for the lender's perspective, it allows them then to run it through the desktop underwriter type system and have that appraisal scored and perhaps give the lender some relief from reps and warranties. On the exterior only, again, the appraiser goes out, takes pictures of the exterior of the property, could take pictures of the comps, comes back and uses what's known as a 2055 form, which is kind of an abbreviated appraisal form. But in both of these situations, with the exception of going into the house to do an interior inspection, the appraiser is still doing the same level of analysis and taking on the same level of liability for her opinion of value. So there isn't much that's changed other than eliminating that interior inspection. We're finding that there's still a level of confusion between the lenders and the appraisers as to which product to use and how best to use those products. And so there's been a number of instructional programs, such as a webinar like this, where we've tried to explain both to appraisers and to lenders what's going on. You also have lenders who are dealing with investor overlays. And so, the ABC Bank may not be selling directly to Fannie Mae or Freddie Mac, but they may be selling to some large national bank. And that bank may not be exercising the same flexibilities that Fannie Mae and Freddie Mac are offering directly to the lenders. And so you may find that, if you're working on a transaction now, that some of what I'm saying doesn't hold true, or you may find that there's different set of requirements for the appraiser. The other thing that's come up just most recently has to do with some action that was taken by the Federal Reserve Bank and the FDIC and the Office of the Control of the Currency, and then a couple of days later by the National Credit Union Administration, and that has to do with the deferral of an appraisal for 120 days after closing. What's important to note here is that these deferrals apply only to what's called federally related transactions. And even though we might think of loans that are going to go to Fannie Mae and Freddie Mac as being federally related transactions, they're actually not. The loans that are impacted by this deferral are really portfolio loans, the loans that the banks are going to keep in their own portfolio. And I would think that in most cases, we're going to find that those are going to be adjustable rate mortgages. At the end of the deferral period, the lender is still going to have to obtain an appraisal. Depending upon what's happened in the market, they may even want a second appraisal to see whether or not there's been any negative changes in market value or anything during that just intervening time frame. But the first appraisal that's going to be done is going to be a retrospective one going back to the date probably that the loan closed. We don't know all the details on that yet, but that's what it's beginning to look like. So that's not going to have a big impact on anybody who wants a 30-year fixed rate mortgage, because those are loans that the lender is going to want to sell to Fannie Mae and Freddie Mac and not keep in their portfolio. I think I've just about covered everything that I wanted to cover. I don't know if there's any questions. Jason, you've kind of disappeared off my screen. There you are.
Yeah, absolutely. So we do have a couple of questions for you. First question's from Amy Sears. Should the appraiser still be contacting the listing agent even for an exterior or desktop appraisal?
I'm going to say yes, even though it's probably not going to be necessary to meet the listing agent. And by the way, hi, Amy. But it's, I think, just as a matter of courtesy to let the listing agent know that the appraiser is going to be going out there, it would make sense to do that.
Awesome. And then a question from Denise Cannell. Do the appraisers have to let the listing agent know what they're doing? And I believe by that she means what approach they're taking.
In terms of which type of appraisal they're going to be performing?
Correct.
I would think, again, I think, do they have to? No. As a matter of good business practice and courtesy, I would like to think that they are letting the agents know what is happening. If not, at least the lender should be able to let the agents know.
Great. Barbara Courier asked, with many of the properties going under agreement without being listed in MLS, how will you be getting recent comps for recent under agreements?
That's always a challenge. All I can say is put them in MLS. You know, it's a challenge, and this is again where I think the listing agents or the selling agents can be really helpful if they know of a property that's gone under agreement that isn't in MLS. If they can pass that information along to the appraiser, it would help the appraiser know the more current information. But still, the appraisers are really looking at closed sales in most cases. The properties that are going under agreement are indicators of where the market is, but the appraiser really has to rely on the closed sales.
Great, thank you. And so obviously the help there is getting information into MLS, but of course that's not always practical, especially in the current market conditions where showings are restricted. So obviously a challenge there. I also have a question from Joanna Schlansky. It's a little, I want to try and paraphrase this for her. What I'm understanding is she's had some experiences where banks are requiring inside appraisals, whereas some of the regulations are saying there isn't a requirement for inside appraisals. Could you clarify that? Sure.
Let me start with refinances, which I don't think is too much of an issue for your members, but you know, on refinances, probably 95% of all refinance transactions right now require an interior inspection. On the purchase side, the deciding factors would be perhaps, you know, loan to value ratio, and a couple of other factors that would come into play. The higher the loan to value, the greater their chance. The other thing, and I forgot to mention this earlier, both FHA and VA have waived interior inspections on pretty much all of their loan production right now, unlike Fannie Mae and Freddie Mac, who still have some interior inspection requirements going.
Yeah, and so that is still a bank issue. If it's a bank portfolio loan, for example, they still have the right to require an interior appraisal.
Right, or they can go with more relaxed guidelines. And in fact, if it's a bank portfolio loan, as I said earlier, they could even defer the appraisal for 120 days. Gotcha.
Well, that's fantastic. Thank you so much for sharing what's going on in your industry, and especially in light of this really difficult and unprecedented time. You know, and certainly we'd love for you to stick around, and if any other questions come up, we'd like to be able to follow up with you on those. Thank you very much for your time, Steve.
Thank you, Jason.
So we're going to move on to Teresa Hatton. So Teresa, as many of you know, is the CEO of the Massachusetts Association of Realtors. And she's going to discuss some updates on the financial assistance programs which are changing by the minute. So can't wait to hear where we are today. Thank you for joining us, Teresa.
It is my absolute pleasure. And in full disclosure, I just had a massive thunderstorm erupt behind me. If you lose me, if my internet goes out, I will go hop on my mobile hotspot and come right back in. So thanks for having me today. I'm excited to be here. It has been a lot for you, our members, I know, dealing with all of these changes, managing your businesses, your families. So I'm hoping that I will share some helpful information. Let's start with the first thing that came up yesterday, which is the Pandemic Unemployment Assistance. This is a program by the federal government that has to be done in conjunction with the states. Massachusetts did sign on and agreed to participate with the Federal Department of Labor. They have put together a new software product and launched it yesterday so that independent contractors and gig workers, individuals who are not eligible for the standard unemployment insurance, can apply for this pandemic unemployment assistance. The levels are a max of what Massachusetts weekly payouts is, which is in the low 800s to 832, I believe, and then an additional $600 from the federal government can be applied. So since this is a brand new system, new legislation, never been done before, you must apply for this assistance through mass.gov/PUA. We've been hearing from members that the application is not challenging, but some members have had to submit documentation. Some members have had to submit Section C of their tax return. Some members have had to submit 1099s, and some members have not had to submit any documentation. And that's because the way this software was set up, it's interfacing with a number of different databases that exist in the Commonwealth. So they might have all of your information if they're not requesting it, or they may not have some of it that they are matching up and they're asking you for additional information. My best advice is to apply. If you get denied, definitely appeal. They have 850 remote workers in call centers working 7 days a week. So if you do get a phone call from the Department of Unemployment Assistance, it is possible that they're calling you on a weekend or an evening. It might not be spam. So if you did apply, make sure you pick up those phone calls and follow through with them. So far, we're hearing positive feedback from our members. If you have any difficulties or challenges, please let John or myself or Jason know right away so that we can all work together to make sure that we get this program quickly to our membership. And with that, I will also update with a change from yesterday, a bill that went through the Commonwealth of Massachusetts on evictions and foreclosures. So yesterday, the state legislature or the governor signed into law a moratorium on foreclosures for the sooner of 120 days from yesterday, or 45 days from the end of the state of emergency, which is currently May 4th. Likely to be extended, but as of today, it is May 4th. There's 180 days of mortgage forbearance for homeowners experience a financial impact from COVID-19. And then also, I just want to caution you, please contact your lenders. This doesn't mean that you just can decide not to pay. It means that you need to talk to your lenders, make a plan with them, have it documented that you are participating in this forbearance, see if they participate in that program or another one that's federally backed by the government, but don't just stop paying your mortgage. Now, for evictions, landlords are prohibited from imposing late fees or reporting to the credit agency for non-payment of rent and terminating tenancies, including sending notices during this time period. All the courts are closed at the current moment, so evictions couldn't take place anyway. But this even goes further to say that landlords can't start filing and doing the process. So big changes there, a lot of confusion in the marketplace about this. Landlords are entitled to go through some of the other federal programs. I don't know if you could see this. It's nothing but hail and lightning out there. Sorry if it's loud. So landlords are able to apply for some of the small business loans and some of the PPP. NAR is lobbying for the PPP to be eligible for even passive entities. So if you own residential properties and you're renting them out and you don't have full-time payroll, we're lobbying to make sure that passive entities can still apply for PPP and cover their expenses related to COVID-19 related issues in collecting rent. So more to come on that. Jason, do you want me to stop or keep going?
Yeah, let me take a pause here because a few questions have come in, and thankfully you're inside and not getting hailed on.
Yeah.
But on our end, I don't think we can hear it too. So you're coming in loud and clear, which is great. A couple of questions came in. Let me just make sure I get through them. If you could repeat the website for the PUA.
Yes, mass.gov/PUA as in Pandemic Unemployment Assistance. And we had a couple of members ask a few times if they had other jobs and they were doing real estate as not their full-time employment. If you are already collecting traditional unemployment insurance, you cannot apply for PUA. You can only do one or the other. So please don't apply on the regular Department of Unemployment Assistance website. Apply on the PUA site if you're an independent contractor full-time looking for help.
That's great advice. Thank you. I know that's come up on our brokerage as well. Do you need to have filed your 2019 returns in order to qualify?
You do not. And that's the reference that I made to some people are being asked for different documentation. If you haven't filed your 2019 taxes yet and you do have an extension until July, you can still apply. You just might have to provide some bank statements and or 1099s. So don't let that limit your application.
Yeah, great advice. And I know personally I was told I needed to provide documentation at a future date, but have never been asked for that documentation, at least yet. So we don't even know where that's going to go, I guess. So if you've received or have a pending deal, is that in any way eliminate or disqualify you from eligibility?
No. So the way, and I'm so glad you asked that question because I forgot to bring that up in my comments. So thank you. The way this works is it's supposed to be if your business is impacted. So let's say last year you did 10 deals by May and this year you've done 2. And if you think it's COVID related, then definitely apply. It's for lost wages and business impacts related to the COVID-19 pandemic. So definitely apply. If you apply and are approved, there is a weekly reporting requirement. So let's say you get assistance over the next 4 weeks and you get $700 a week. I'm making this up. And then you have a commission income that comes in. You would report that week. And if it tipped the scales, they may reduce some of your benefit moving forward. They may not. So just keep that in mind. Don't let it prevent you from applying, even if you have a scheduled closing coming up.
Great. I think you've answered this, but just to confirm, if you are working part-time with as a salary person and as an independent contractor agent, can you apply for both?
You cannot.
Unemployment assistance and PUA.
Yeah, you have to choose one or the other. So definitely look through what you can receive through both programs and make a decision which might be better. I will share, which I didn't earlier, that there is a daily virtual town hall being run by the Department of Unemployment Assistance, and they are answering questions live. So if you wanted to participate in one of those, it's a great opportunity to get some more of your more personal questions answered.
Great, thank you. I had a question of how long is it taking for review and approval? I believe this is in response to PUA, and I think I know the answer, but I'll let you take that.
Yeah, the answer is yesterday was the first day and there were over 50,000 applications submitted. So we have not heard of any approvals or denials. At least I have not personally yet today, but we will definitely keep you posted. And I'd be very interested in you sharing your experiences with Jason, myself, John,
Yeah.
so that we can gather that data.
The interesting thing is they set the expectation of 2 days which seems completely unrealistic, but that is what the expectation on the application is. We'll see if they can stick to that.
Yeah.
EIDL was supposed to be 3, so we know they didn't quite hit that.
Right.
And then one more question here is for newly licensed agents who haven't actually closed the transaction yet, but that is their only job. Is this available to them?
So this is where I think you're going to have to go to one of those virtual town halls and have a conversation, because in order to apply for the PUA, you had to have earned at least $5,100 in 2019. That does not have to be $5,100 from 1099s or real estate, but you do have to have at least earned a certain amount of money to apply for PUA at this point in time. So if you have no other source of income and this is your full time, definitely apply. Just make sure that you have made at least some money last year, $5,100.
And I'm going to ask for there's one more question I think a lot of people would be, and I'm going to rephrase this a little bit. Can you define the difference between the PPP, PUA, and the EIDL, and specifically for passive entities, which one should they be applying for?
Absolutely, happy to. And keep in mind, this guidance could be changing with the additional lobbying efforts going on. So as of right now, PUAs, independent contractors, gig workers, EIDL, which is the disaster relief program by the Small Business Association, that program's been in existence for a long period of time. You apply directly to the SBA's website for that program. Because they ran out of money, the program during the CARES Act was expanded to include up to $2 million in relief and a $10,000 bonus right away. That has been drastically changed because they do not have enough funds. So right now it's $1,000 per employee for a grant upfront, up to a maximum of $15,000. This is part of the stimulus package that will be coming up over the next week or so to continue to fund this program. So EIDL, you can apply for as a sole proprietor, as an independent contractor, and as a passive organization, because if you own rental properties and people are not paying their rent, this can be used to pay your mortgage, rent, etc. Then we have the PPP, which is the Payroll Protection Program. The PPP is available for independent contractors, sole proprietors, and other organizations that are small businesses under 500 employees. It is not available for passive entities at this point in time, though NAR is actively lobbying for that. We know that we have a lot of members who would benefit from the PPP if especially they own property and they are not receiving rent and they still need to maintain these properties, their taxes, the upkeep, etc. So as of right now, PPP is open to independent contractors, sole proprietors, businesses under 500 people, not passive entities at the current moment.
Just got to unmute myself. Sorry. Thank you. That was great information. I really appreciate you getting through that. And you started to touch on the end of there, the federal stimulus bill and the funding that's coming underway, hopefully being voted on soon.
Soon. So there is consensus from both the House and the Senate and all parties involved that they want to support another $250 billion to the PPP program. What they are getting tied up with is that some people want to attach some other lending entities and also some funding for hospitals along with this. So they're trying to negotiate whether they just make it straight PPP or include some of these other things, and that's been some of the delay. We will keep you posted. We hope to have some resolution towards the end of this week. Having said that, though, with the current amount of applications already received for PPP, even another $250 billion will likely fund those, but no new applications. So a third round of stimulus will need to be created to meet the demand. So if you don't already have an existing application in, get your paperwork together, get everything you need together. And when that stimulus package comes through, we will definitely be sharing that information that you'll be able to apply. If you're hearing things from your bank, such as, We're not going to give you a small business loan because you don't have an account with us. That is not okay. The regulations do not allow for that. So please share with us those lending institutions and any experience you've had related to that, because it definitely helps us go back and talk to the Small Business Administration about those issues. What the banks are challenged with right now is there's some regulations related to the Consumer Protection Finance Bureau and enforcement, because after 2006, 7, 8, when the banks were lending and then the government was underwriting everything, the banks were giving away money to people who maybe weren't as qualified as they should be. So now the banks have to take on that responsibility. And they're saying to the federal government, look, we're taking this risk, but you're not backing us up. If you're going to forgive these loans and we're not going to receive the payment, you have to do something to help us feel more secure that we're not overextending ourselves. So that's part of the challenge, and that is being worked on. You'll be seeing things from banks, saying we need some help, we need some assistance, especially small banks. So we are working on all those issues.
Great. Yeah, it's so many moving parts here and so many unknowns that I think you're doing a great job trying to bring some certainty to a really uncertain situation.
I hate to use the word unprecedented, but like independent contractors receiving unemployment assistance, brand new. There's just so much new being rolled out over the last 6 weeks, and it continues to change. I want to share also some information on MAR's upcoming town halls. On Thursday of this week, we will have Bob Goldberg, who's the CEO of the National Association of Realtors, and also Vince Malta, who is the president of the National Association of Realtors for 2020. I believe somebody asked a question earlier related to some housing stuff. Vince will update you and share. He had several one-on-one conversations with Fannie, Freddie, the house with HUD, and just sort of he'll give you an overall update on everything that's going on there. Following that, we're going to have a 3-week series on keeping your business running during this time with Lee Brown, who's a very dynamic, very entertaining national speaker. We have up to 3,000 seats for all of those events. They're Thursdays at 2 p.m. We will take a slight break on March 14th because we'll be participating in NAR's mid-year virtual meetings, but then pick up again on the 21st to end that series. And then other than that, there's just so much going on. And if you think of an issue or hear of an issue or experience something, please let us know. Also, we're trying to ramp up our tools for when we're out of this. And we really think that people are going to start looking at their business models and evaluating different ways in which to run their businesses, perhaps more efficiently, perhaps just differently. So if you're thinking about changing your business practices and are curious about different tools or things you might use, please let us know, because we'd like to be proactive in educating you on some other options that maybe some other industries are using that we haven't brought into real estate yet. So very excited about that as well.
Yeah, and you guys ran a great program. I hope everyone has had a chance to review it if they weren't able to attend live with Lauren June. Probably one of the more uplifting things that I really needed that information from Lawrence last week. And I think a lot of the membership would appreciate seeing that as well. And that was a great event.
Great. Yeah, Lawrence is such a wealth of knowledge. And if you missed it, the recording is on our marcovid19.com site. We also have some updated forms. I know you all have updated some of your forms as well. The smoke certs, we've got an addendum that is not required. It's optional if you'd like to use that. We did partner with the Fire Prevention Association of Massachusetts to work on the smoke certs, and the follow-up 90 days post the emergency, 80% of fire services are no longer conducting in-person inspections. However, in your marketplace, some of them are, and they're still accepting the applications via their online web portals. So we have that published at our MAR COVID-19 site, although I have to update it because I had a change. So look for that later today.
Great. A few more questions, since this is a great opportunity for some of the members who have some specific things, but I'm sure they're not the only ones. One of the questions, and I think there's actually two questions that I think are kind of linked. should an agent be applying for PPP versus PUA? And I think the important distinction there, and I know you have a lot more detail on it, is one, you have to have a payroll that you pay out versus for PPP, and PUA is for basically running your business.
Loss of income. You can apply for both, but keep in mind if you do apply for PPP and you receive it and you pay yourself from some of those funds, you will have to report that on your PUA application, and that may disqualify you. But PPP funds can be used for other things such as rent, mortgage payments, things that keep your business up and running. So if you have software tools that you're paying for, et cetera, it can be used for that as well.
And to that end, do you need to have a business name in order to apply for the PPP?
No, but you do need to have a tax ID. Yeah, so it's available for sole proprietors, independent contractors. So you do have to have a tax ID of some sort.
Great. And are you aware of any banks that are still accepting applications for PPP that for non-primary memberships or primary account holders?
There are no banks accepting PPP applications right now because there are no funds available to fund any additional applications. No bank is allowed to accept an application. So shop around for your bank and say, when and if this is available, will you be supporting it, etc., and make those relationships is my best advice. Once the funding becomes available, we know they're going to be slammed with more applications.
Yeah, absolutely. And just like I know because it came up last week that as of last week, Metro Credit Union was accepting new PPP and they weren't putting as much of a requirement on having membership with the bank. However, as you said, no one can apply right now, but I know as they're one of our affiliate members who had indicated that to us, definitely a place to contact for our GBAR members.
Great. Yeah, they ran out of money on Thursday, so they would have been probably accepting up until then.
Great. Well, thank you so much. I mean, just a wealth of information there, and I'm sure there's a lot more questions. I do want to remind people that you've got MAR's website available to you. We've also, at the GBAR.org, have a website on the news tab for coronavirus updates, more specific to our region. And you've got the NAR information and NAR coronavirus website available. Do you have the URL for the coronavirus website for NAR?
Yes, it's nar.realtor/coronavirus.
Great. Well, thank you so much for your time and joining us today. This was very helpful for everyone.
Thank you both so much. Be safe, everybody.
Yeah, thank you. And we'll share my screen again. All right. All right, so we've had some really great information today, and keep the questions coming in. We can try and circle back. We've got about another 20 minutes or so on this town hall. We will be back next week with some more information. So if any other questions come up, you'll have some time to get those to us. However, to finish up today, we've got our Executive Director, Mr. John Dolczewski, joining us to cover some of our initiatives that will be in some of the information available through GBAR. So John, please join us. Thank you.
Thank you, Jason. And I just want to, again, thank Teresa for her time today, Steve as well, but Teresa and I play similar roles, just at different levels to the organization. And it's been interesting to see over certainly the last several weeks, the type of information you never thought you'd have to get familiar with and now do. And as I think Teresa demonstrated today, she's got a tremendous grasp on that and has really done well serving the members, as has President Kurt Thompson. They were early on communicating with all of us at the local level and now have taken that to the member level with the virtual town hall forums and are doing a terrific job, I think, keeping everyone up to date. What I wanted to just touch upon with everybody today is just let you know some of the resources and programming available from the Greater Boston Association. And I'd start specifically with a new document that we've just put up on our coronavirus page this past week. It was something that you all as members asked for, and that's a sort of central resource and one-stop shop sheet in which you can look at all the communities in our jurisdiction when there are 64 and look to see what the government orders, guidelines, or policies are that have specifically been put in place implementing our industry. And so that would be things like if there's an open house and showing policy or guideline that's been put in order or restriction against those, as well as for residential construction and smoke and CO detectors, we're tracking that performance. The evictions and foreclosures issue we were monitoring as well, but obviously with this new legislation, that will take precedent and be followed by most communities in our jurisdiction. But all of that is available online on our website. Again, Jason mentioned it, it's gbar.org. You can get there through the resources tab on our top of our homepage, or there's also a image right in the carousel towards the top of the page, which you can connect to very easily. I also wanted to mention that we've done a series of online programs, virtual learning opportunities for both agents and broker owners over the last several weeks. The Road for Success webinars were geared towards agents and prepare for impact, effectively managing during a time of crisis or a time of change. Those were all recorded and are now housed on our website, so you can get to those through our education and events tab at the top of our homepage. So I encourage you to check those out. The most recent broker owner session, which was on the Realtor Property Resource and how to use that in your business, was available just last Friday. In terms of delivery was just last Friday. So we're in the process right now of uploading that, and that should be up, I would expect, by the end of this session, or certainly the end of the afternoon for those who are looking for it. These GBAR Live webinars, we're going to continue. We're excited by the participation on today's session. And so we're going to continue these on Tuesday afternoons, starting at 2:30 for an hour, right through the end of May, at least currently. And if there's a need to extend them, we certainly will. With respect to that, we're certainly looking for the most timely topics and issues to bring to you in these sessions. So if you do have suggestions that you'd like to pass along to us as staff, we're happy to take a look at those. We do have next week's session already planned. So that'll be Tuesday, April 28th, again, starting at 2:30, and it's going to take a look at the lending industry and how they're reacting to this pandemic. So we've got Ken Fears, a senior policy representative with the National Association of Realtors, who will specifically speak to what's being done through the GSEs and the mortgage lending industry in general. We also have Deborah Souza, who's the executive director for the Massachusetts Mortgage Bankers Association, joining us. She'll talk about how her members are reacting to some of the changes that may be occurring with regard to loan qualifications or programming availability and eligibility. And lastly, we'll have Lisa Fiandaca, who's director of home ownership with Mass Housing, and she will be joining us as well to talk about mass housing programs and some of the changes that have been implemented there. I also did want to put in a plug for our broker counseling line, which is available to all members and staffed by Bill Mullen, who you saw earlier on when we first came on. The Massachusetts Association of Realtors also has its own legal hotline that's open to broker owners and managers specifically, and you can access both of those weekdays. And lastly, I'd mentioned that we're taking a look, leadership is taking a look at the ability to deliver for members of some sort of platform for virtual tours and showings. And so we're looking at either a member discount program, perhaps even a full member benefit that would be integrated depending on the pricing that we're able to negotiate. So watch for more to come on that. Hopefully we'll have something to announce here in the not too distant future, certainly by the end of the month, we're hoping. So with that, that's what I wanted to share with the members today, Jason, and I'll throw it back to you.
Yeah, thanks for that, John. A lot of stuff on the staff side with GBAR. We've been doing, they've been having quite a bit of meeting and trying to adapt to the new way of doing business. And I think it's okay to say this. We're going to be releasing a request for our members later this week, and give you guys a chance to start thinking about who you know that may benefit. We're looking for a way to thank the first responders, especially the medical community. and especially family members of our membership, parents, children, spouses, siblings. And we ask that you provide the photo and some information about who they are and your relationship with them. It'd be great to have a photo with you and them so we can identify you. And we'll have some more instructions on that hopefully by the end of this week. And we're looking to put together a thank you video to those first responders and to that medical community who's doing so much to help us get through this process. We know it's been taxing and difficult on a lot of families, especially with those that are exposed on a daily basis through their job to the sickest in the community. So we'd love to know more about who's in your family and who we can thank. We're looking forward to some more of these roundtables, as they said, and there's obviously the NAR Mid-Years Conference coming up. That's going to be hosted virtually and starting in 2 weeks. If you haven't seen the emails, please keep an eye out. There's a lot of information about the virtual conference, for lack of a better word, and how that will be operated. One of the best events I go to every year is the NAR 360. It's held at the mid-years meetings, and it's also held at the national conference, and that is a great overview of what's going on in our association. And I would say this year more than ever, there's a lot of moving parts, and that's hard to say because every year there's a lot of moving parts and a lot that the association is doing to further our industry and our profession. And this year, I think more than ever, they have just done an amazing job making sure we can continue to be a business that can operate. I'll give everyone one more chance. I believe Steve's still with us if there's any more questions regarding appraisals. And Steve, thanks so much for joining us again. I really took in a lot about, especially how appraisers are approaching things and how they're asking our agents to prepare and our sellers to prepare. Thank you for joining us today.
Well, we certainly appreciate the opportunity. Anytime we can get some information out there, it helps all of us. And I'd invite anybody who has a question to give me a call or email me. And John can pass along my contact info easily enough, and I'd be glad to talk with anybody.
And is there a way for our agents to be able to find members of your association for future business?
Yes, right on our website, there's a link to find an appraiser. You can search by zip code or by name and come up with a list of our members.
And what is that website?
It's mbrea.org.
Great. So that's some great advice to find the professionals in the appraisal industry, which is always who we want to be doing business with. Mm-hmm. So yeah, thank you everyone for joining. We hope this was insightful and we were able to answer your questions in a meaningful way. And just stay safe, protect yourselves, and look for opportunities in this new way of doing business and probably our new economy. There's a lot more that we're working on that we hope to have in front of you in the next week or two. So thank you very much for your time today.
Thank you.
Thanks, Jason.